Alrighty, traders. Good afternoon, good evening, and welcome to the AAA session here today. I want to go ahead and make sure that everything is working the way it should be, and we should be good to go. So I want to go ahead and say this week we got a lot of fundamentals coming out this week. In fact, we're looking at the Euro rate decision. We're looking at the Canadian rate decision. Obviously, a lot's going to come in the press conference and how how the verbiage is delivered. We've got Aussie job numbers coming out. We've got GDP numbers coming out, the quarterly data coming out for the New Zealand and for China. This week, a lot of data. So we're going to go ahead and talk about that. We're also going to talk about some trade setups that we spoke about in the anniversary event last week. Get a quick update on that as well. I know I certainly have a few pairs I want to go ahead and get my experts to go ahead and discuss and talk around whether or not the trade that I was looking at last week is still a good option. I know that we've got a couple of updates. I know Tyson's got a couple of updates that he wants to talk about, specifically the Aussie US dollar. I'd like to hear from Tyson what's going on with the Aussie US dollar. But we've got a lot to chat about, and we're going to go ahead and discuss it in today's session. Remember, guys, the chat is available for you to go ahead and post questions. Post the questions. All of us are looking at the question boxes. If there's anything that comes across the board that we're going to go ahead and discuss, we'll go ahead and do so. But please go ahead and make sure you post the questions. Now, before we get started, go ahead and smash the like button right now. Smash the like button. But also, when we're done, if you have not subscribed to this channel already, it's time to go ahead and do that. But we'll give you a chance to do that right after the session today. So with that being said, let's go ahead and introduce to you the panel, which is going to be Chris and Tyson. Chris, how are you doing today?
Doing very well, Gary. Nice to be here. Hey, everybody.
Fantastic. Tyson, how are you doing today?
I'm doing great. Good weekend. Excited about this week. We've got a lot of fundamentals for currencies and almost $2.5 trillion worth of market cap stocks with earnings this week. So it's gonna be a good week.
All right, well, very good, and definitely a lot of stuff going down, specifically with fundamentals this week. And I'm sure that you guys have got a lot of stuff that you want to go ahead and talk about, and maybe just give some traders some updates as to what we were looking at last week with trade opportunities, and how we're going to go ahead and address them this week. Because, frankly speaking, we haven't had a lot of movement out of the market over the last month. In fact, I actually did an update today, and I noticed that we have not really had a lot of movement. But this morning, I don't know if you guys noticed, but we had a lot of the risk-off currency pairs starting to move this morning. We had some weakness out of US dollar, JPY, and Swiss franc that gave a little bit of upside push. Did you guys notice that?
Yes, yeah. And somehow the euro is the strongest currency pair of the morning. So the euro is not really attached to the safe havens like it was traditionally, but now we have, JPY. I'm looking at it right now. Japanese yen is the weakest. Pound is second, dollar's third in the weaker category, and then Swiss franc is right around baseline. But the euro somehow surfaced today as like the strongest currency pair. So euro Swiss making a move finally.
Right.
Yeah.
Now
I
we
like
could
too. I set up a trade, the euro Swiss, that we could talk about a little bit later in the during the anniversary event that I really like.
Nice.
Yeah.
Well, hey, listen here, Tyson. What better to go ahead and jump into that currency pair right now, because it is strong euro, weak Swiss franc. It looks like a great setup. So what is it that you spoke about in the anniversary event that we can go ahead and talk about? Because we do have the rate decision coming out on Wednesday on this. So is that influencing your decision?
This is more of a swing trade. So it was during the swing trading session in the anniversary event. So it's actually, I set it up kind of as a longer term swing trade. But let me pull it up here. I've got a target, and this is a long term target. We spent a lot of time on weekly charts. We kind of drilled down into daily charts, but it actually ended up going right down. It's actually pretty brilliant. It went right into my buy zone right after the session last week. My buy zone was right at about 106. Price went directly down to 106. You can go back and watch the recording. I posted it before it got down to 106. Literally bounced exactly off of the level we called out, and now it's up to 106. 89 right now. My overall target, I've got two targets, is up to 110.25 and 111.70.
Okay.
Basically meaning this, I think we're forming a medium to longer term floor pattern right now. For those that love patterns, this is a really nice cup and handle pattern that's playing out on the weekly. And I think this thing is starting to break out. We started to break some trend lines on the upside. So I think this thing has got plenty of legs. My question would be, if I weren't in this trade right now, or even if I am, is there a place where we could maybe lock in some profits and look to buy back lower? And I'm going to answer that real quick. I think, yes, we could play this to lock in profits to the upside and buy back lower, but let's not overmanage this where we miss the big upside, because I think that this is going to have plenty of legs to the upside. However, with that being said, if I do want to try to get a little cute, I do think that there might be an opportunity in the next day or two for a pullback down towards 106.40. And I think so. If you want to look to get into this, I don't necessarily think you have to jump in right now. I think we could potentially pull back to 106.40. If we don't pull back to 106.40, then you can maybe look to buy on a break above 107.10. So you can kind of bracket. I like bracketing the order where if you're like, I want to get into this trade. Buy if we break above 107.10. Buy if we trade back down to 106.40. Either of those buy areas I think is good for a longer term play.
All right. Well, I actually look at this and I'm actually pretty tired. I don't know if you can see the chart right now, but what I'm looking at right now is, and this is something that you speak about swing trading, and this is pretty much what I'm looking at right now. I noticed that we had a 5-wave. I've got the daily time frame open right here. I noticed that we had a 5th wave completion down here, and now I'm in an A, B, C correction move. So I'm right with you there, Tyson, because we're talking about price moving all the way up to around about 1.1060. Yeah.
So my question would be to both you and Chris would be this. What are you guys' thoughts on bracketing that order where if I'm not in this trade, if we get a break above that 107.10, that could be the sign that, hey, this thing's not really going to slow down, or putting an order at 106.40 just kind of say, hey, I want to get in if we sell off. I want to get if we break above. What are you guys' thoughts on that?
I think telepathically, Tyson, we are on the same page because I already had that bracketed from last week. I was in like 20 positions earlier when we had that big run from 105 to 109. Took probably 80% of those profits. I still left some positions in around that 105 to 107 area, and I did the same thing. I saw this little turn at 106. I'm actually trying to buy it again at 105 if it came all the way back down to those lows, but I have buy stop levels at 107.25, 107.50, 107.75. So I'm looking at the same level. And one thing that all you guys are mentioning with this beautiful 110 area, 110.50 area is there's a yearly pivot this year for the Euro Swiss at 1.1045. So that's right there in the same wheelhouse. So love the direction that we're going. I think the pattern's lining up really nicely. I don't think this trade's going to happen, overnight. I think this is going to take time, but I mean, every day I look at the currency strength chart and see the euro stronger than the Swiss. That means good things for this pair.
Yep.
So let me understand here. So both of you, Tyson, you and Chris, are you guys adding on as price moves up higher? As price moves higher, you got levels that you want to get in at?
Correct.
So I'll do both. Yeah. So I'm already in a position right now, but what I'm looking at is if I weren't in, or two places that I would add is I would love if we go down to 105. Obviously, I wouldn't love it because I'm already in a position right now that's profitable, so I'd be giving up some profits. But so I'm not sure if we're going to get down there. But
I don't think so.
If we do get down to 106.40, and I think there's an opportunity within the next couple of days to 106.40, that's a really, really nice place that I would for sure add it. That 106.40, or if we get a confirmation break above 107.10, what that's telling me, that's kind of that high. I think that's the high in the last, maybe even over the last month, or near the high in the last month. There's a little bit of a daily pivot there.
Yep.
If we break above that 107.10 level, that's going to be my confirmation that this is a real move, and that's a nice place to start adding in at, and really look for that kind of that continued euphoric rise.
Yeah. Yeah, I agree with you. I don't think 105 is going to come into play. I think we've hit support there at that 106.30 level. Maybe 104.10, or at least 106.40. I'm not too keen on price coming that far down either. But I'm going to say this: anytime the market dips, we're buying on the dips, right? So buying the dips as the market dips, and that's going to be my approach. Now, your approach on that 720 level. Or 710 level, did you mention? If price does break up.
The reason I like that, Gary, and the only reason is I actually set up a lot of trades like that because one of the most frustrating things that I go through is missing trades, right? I get too cute with my entries, and I'm like, oh, well, I'm really good at
Sure.
what I do, and so I'm going to buy at 106.40, and I'll just put an order at 106.40, and then I'll wake up in a couple days and see the price is at 108.50, and I'm like, what in the world did I do? I mean, I just missed out on a huge run. So it's
Yes.
one of the ways. So what I'll do is I'll trade smaller on the breakout because I might be buying highs, or I might be buying short-term highs, but I want to make sure. But again, it's a swing trade. And then if we get a retracement, I'll trade a little bit lower, or I'll trade a little bit larger size. But it's my way of making sure that I don't miss the move, essentially, if I'm really convinced in the long-term move.
Yeah. I like it. Now, when you say break of that level, are you waiting for a large time frame, like a daily candle to close up and close above that level to confirm that breakout before you say, okay, now I'm starting?
Great question. So when I say break, it's more of one of those kind of make sure I cross my T's and dot my I's. We're in front of the public, and I can't give advice. So every time I say break above, what I'm really saying is Tyson's going to buy right there. So I'm going to buy at 107.10. But
okay, so you're not even looking for a break. You're looking at 107. I'm entering 107.
107.11 essentially, because that would be the technically it's 1 pip above that. So if we can confirm 1 pip above that, that's where I'm going to buy. So, but that's the way I type it out, and that's the way whenever I'm in front of students, that's the way I talk. Say, hey, I'm going to look to buy on a break above here. I'm going to look to buy here, just simply because it's kind of hedging myself where I don't want to act as if I'm giving advice.
Okay.
Yeah.
Okay.
But yeah, so I will personally buy at 107.11.
Okay. All right. Good. All right. Well, good. Let's move on to a couple of the euro crosses right now that Chris, maybe you're looking at. We've mentioned euro Swiss franc, and we're in agreement with what Tyson's saying here. But what about any other pairs? I'm very much interested, of course, still in the euro New Zealand dollar. And the euro New Zealand dollar is still sitting at a support level, and we have it broken. I'm going to pull up the chart right here so everyone can see what we're referring to. This is the daily right here. So this is what I see here. We're still in this upward channel. We do have room for price to still move down a little further down south right here towards that channel line right here. But I'm expecting a correction, even if it's a short-term correction, some sort of rally in the euro and New Zealand dollar in the short term. I'm watching this pair right now. Now, obviously, we've got the news coming up. We have strong news that's pushing the euro right now, a strong push in the euro this last 12 hours. And so it is going and starting to move back up. Man, this has been a long time waiting. But we starting to see the movement taking place. Now, what I did mention in one of my rooms is that as soon as price takes out the low right here, this is what I said. As soon as price takes out that low, which is priced at 71.84, I'm going to start adding onto my position. I'm going to start looking to continue to buy this because we're starting to see a nice convergence level right here. See how price takes out the low, and we see momentum still pushing up. So I'm locked and loaded, ready to go, and I'm still going to go ahead and add on to this position as price goes below that low. It's moving now. So the question is, do you still see this thing moving further up north? And I'm projecting, 75.94 and then 79.22 as a target?
I think I like your New Zealand. I see the harmonic you have on your chart. One trade that I'm actually very interested in this week is the Euro Aussie. Last week, traders in the room with me, the Flex Trading Room, we ended up getting some great levels on Pound Aussie, bought it nice and low at 79.20, stacked up some orders that we were talking about kind of bracketing. We did just that. We bought it low. We stacked up some orders to the upside, and we ended up grabbing like 800 and some pips on the Pound Aussie. The Euro Aussie this week is the same thing. I have pending orders to buy these little indecision levels that go back into late June. I'm trying to buy the lows around 60.50 or 1.5950, but I'm looking at a level this week to get back to like 64. The last couple of weeks we've had these sessions, we've been talking about the news and lack thereof. So this week with all the news between the ECB press conference and Aussie employment and just volatility, hopefully because the news is plentiful, this would be a trade that technically goes where I want it to. So I'm looking at if there's a chance for it to dip, if the Euro Aussie can dip one more time, I will buy those dips. Otherwise, I have buy stop levels stacked to the upside, and I'm trying to target around 6,400 safe, which is not that far away. It's about 120 pips higher. But previous highs, we have a ton of indecision around 6,420. So 6,400 plus, I'll probably take some profit, see if we can, officially get into a buy zone on a smaller time frame and maybe look to turn on a robot to trade with that trend. But I think technically we should be seeing 6,400 to 6,450 this week on the Euro Aussie. So I'm looking to, build some positions around that. So you like Euro New Zealand, Gary. I like Euro Aussie, but I think both of them, they're kind of related in the sense that if the Aussie and the New Zealand are weaker and the Euro stays stable or stronger, both of us are going to get what we want.
And we've got CPI coming up, quarterly CPI coming out on Wednesday as well for the New Zealand dollar. But then we also got the jobs coming out for the Aussie at the same in the same day, a little later, and that is expected to see some higher unemployment rate. Then we've got, of course, GDP out in China, and that's also going to affect the markets as well. If that shows positive 2.2%. Could you think that could change the directional bias based on the Aussie weakness and New Zealand weakness, and start seeing a little change in the direction for the pound Aussie?
Yeah, I mean, I think the news definitely can, but truthfully, whether the news cooperates with what our analysis is or not, I just think that we're going to get there based on, look, I've got a really nice bar count. One of my strategies for right trader is a reversion strategy, and when it gets overextended, oversold, overbought, we've gone a long ways without balancing the trend. That's exactly where we were last week on the pound Aussie. That's exactly where we are this week on the Euro Aussie. So I think the news is just going to provide the fuel to drive it up to the levels that we want. So I mean, again, if it makes sense to the traders that are trying to follow the news, then I would expect Aussie weakness. Expect the data to be, somewhat sluggish.
So can I throw something at you guys that I think, first of all, I agree 100% on the Euro Aussie and the Euro New Zealand. And this is and I have small positions in both of those, but this is the way I'm going to play it. I actually see the Euro Aussie, Euro New Zealand outperforming the pound Aussie, pound New Zealand for a little while until the Euro pound hits around 90.40, because we have a 4-hour or a 2-hour AB down AB. We have a 382 retracement on a daily that will be hit right around that level. And that's when I think the Euro is going to start to show relative weakness against the pound. So I would give the, and this is, I don't want to get too wonky or technical, but I would look for another 50 to 100 pips in the Euro Aussie, Euro New Zealand on the upside. And at that same time, the Euro pound should push another probably 30 or 40 pips. And then I'd get out of those two and I'd go focus on the pound Aussie and pound New Zealand, because I think you're going to get better bang for your buck in the pound than you will the Euro. But both are going to be good. But that's the way I would play it.
The only difference between the two is you'll have more margin requirement for the pound than you would with the Euro. Now the thing here is, I actually said to the students last week Thursday, to go ahead and Chris, you and I both know we love scalping on the right trader max. So I said to traders on the Euro New Zealand dollar, specifically the Euro New Zealand dollar, go ahead and start buying along using the 1 minute time frame, trading the European session. And if we go to the chart right here, this is what's happened on the Euro New Zealand on a 1 minute time frame. This as you started this week right here, there's buying opportunities. Look at this. Look at all of this right here. And so far, just for this trade, for this week alone, starting, of course, today, the market's moved up 94 pips, but the ranges, or these stop losses, are around about 20. So this has gone about 4 times the stop loss just today. So if they traded just today alone, they would have picked up, because we chased after a 3-to-1 risk-reward ratio, they would have picked up their trade this week alone and made themselves 3-to-1, or at least 1-to-3 risk-reward ratio on their trade, which means you're risking 1%, you're gaining 3% just in today alone, just on that big move right there. So the markets are certainly setting up with very strong support levels or resistance levels that traders should be buying and selling off. That's going to create great opportunities for the early start of the week, just before we get into the data that's coming out on Wednesday and on Thursday. Now, shifting gears, what do you guys think about U.S. oil and the fact that we've got the rate decision coming out for the Canadians this Thursday as well?
Well, I mean, oil's sitting right at $40 and change. I looked at it right here, $40.64. There's major resistance
not breaking.
To me. What's that?
I said it's not breaking that level, yeah?
Right. Yeah, I was going to say, to me, there's a lot of technical resistance right at that $42 level. I think that, what I'm really looking for is either a ton of indecision or something a little bit more obvious. Price has been really quiet since we just kind of drifted above the $35 mark. It just kind of worked its way up into that $40 level. 40's nice and firm. I could see, I mean, if we tap 42 and then show a big rejection or a bearish candle, I think we're going to drop. If we close above 42, then I think this drift continues. So where does that put the CAD? Where does that put the rate decision? I mean, I think we can look at oil and look at the dollar CAD. The dollar CAD has, to me, it's range bound for the most part between 38.50 resistance and 33.50 support, and it's sitting right in the middle, right around 3,600. Between 36 and 37, I'm an inactive dollar CAD trader, but I'm looking for a level to trade off of. I'm curious both of your guys' thoughts on dollar CAD on like a weekly chart. Do you think that the dollar CAD has enough structure to set up a double top and have the ability to go lower? I mean, I know that Tyson, you're kind of perma bear on oil. I agree with you on that, but it's like I'm just thinking that right now, you know, commodity pairs and commodities in general can just be stable and stronger with a slightly weaker dollar. That to me looks just like it's just a really good looking pattern on the dollar CAD for that to drop towards the lows at, you know, 3,000 again, which I would gladly buy. But I'm wondering, you know, as Gary has the chart there, is it a channel that's going to provide a ton of support and we head back up to the highs, or is that are those two highs significant enough to actually force, you know, more bearishness on dollar CAD?
It's actually interesting because this is the first time in, man, maybe 10 years that I've actually been pretty neutral on oil. And this is after a big rally. And you might be like, well, what in the world? What are you talking about, Tyson? You were a perma bear. And I am like long term. I'm super bearish. I think the fair value of oil is $5 a barrel or less in the next 20, 30 years. Because I think the usefulness of it is going away. And so that's long term. However, we have now gone, and this kind of shows the efficiency of the market. We have now gone through a cycle where there's been a destruction in demand, by like just a massive destruction in demand because of COVID. But there's also been a massive, almost equal to destruction in supply. And so the supply and demand equation right now pretty much is fair. And I think the fair value of oil is probably around $30 to $40 a barrel. I think it's kind of right in here based on the current supply and demand equation. And so it's going to be interesting to see so if these COVID numbers pick up, then demand destruction is going to get even worse and oil will come down. If COVID numbers do well, then supply will have to increase because demand will go up. And so I think it's going to stick around. I think we're going to kind of hover. But with that being said, wrapping it back to the dollar CAD, in this kind of hover, I think we're going to hover between 35 and 45 for a while. And in that hover, I could see the dollar CAD floating down to that 130 level, like you were saying. I think we have that's what I call a cluster, an area of a battle of bulls and bears right in there. And that's a very clear battle area that the market, I think, will want to come back and test, and it'll base around there. And then that will be the catalyst that either takes us and tries to make us attempt to that 150 level again or down to 120 again. But it's all going to start right around that 130 level, I think.
Yeah. If you actually take a look at the dollar or at least the US oil chart right here, you can see here I've got it set up in this this bearish wedge right here, and if this is going to dip, as you said, with the supply and demand issues there, Tyson, then we should see $26 a barrel come into effect as well. Then maybe go back up. I don't know if it's going to be range bound between 40 and 26 for some time, but eventually, I think eventually we're going to start seeing the breakout. All right, eventually see how it starts seeing the breakout.
That's going to happen because here's the deal: how can COVID get even worse? How could we go through even worse? Because as you guys know, I'm not real bullish on where things are at. I think we've gotten way ahead of ourselves and thinking things are rosy and colorful and everything. So if my thesis is right, and I'm not saying it is, but if it is, then we could go supply could or demand for oil could go down even further. So how could oil rally if that's the case? Because supply could get even more constrained. And so if supply gets even more constrained, then the value of oil can still increase. So I can't deny that oil in this environment, because it is so manipulated, could be a $50 a barrel.
Sure.
Yeah, it could be. Well, it looks like it if it does break out that $42 a barrel or level of support there that's now become resistant. If it breaks through that, we should be seeing 66. And if it continues with that falling wedge, normally it chases off to the top of that, we're looking at around, what, $146 a barrel? That's, I mean, look, we're talking about, a lot further into the future. Yeah, I definitely go to flying cars and battery operated things when it gets to that price. But in any case, when you get to those levels, we're certainly going to see a breakout of those levels. And so Going back to the Canadian dollar and the rate decision coming out this week. Now, we've seen a lot of the times now over the last few rate decisions, we've actually seen when they keep the rates unchanged, we've seen a negative move on the actual data. But I'm actually talking to clients or to students, and I'm talking about a positive move with the rate decision coming out. I think the rate decision, the verbiage out of the statement, everything around that is going to create Euro positive, which you've seen right now, Canadian positive, which I'm expecting it to come out as well on Wednesday. Do you guys see still a positive move on CAD, or do you see a downside move because of US oil?
For me, the CAD is one of those charts and one of those currency pairs as of right now, unless it's against something that's fairly obvious, maybe like the pound or the euro. But for now, for me, it's one of those against the dollar that's almost untradeable for me at this point. It just seems I could see it like we just talked. I could see it trying to go back up to that 145 level. I could see it trying to go back down to 120, 125. And there's nothing in the charts that is like completely clear to me that makes me say I've got to take this position. And maybe we'll get some more clarity this week with the rate statement. But I'm like Chris. I think I'm going to stay on the sidelines when it comes to the dollar CAD for now and just kind of see how it plays out. I'll watch oil a little bit, but I think there's going to be better, more clear opportunities in the future.
Yeah, and honestly, I think that this week the CAD could also take the second seat to the other news that's out. I mean, for example, EuroCAD is sitting at this major range resistance around 5,400. Aussie CAD, New Zealand CAD, two of my pretty favorite currency pairs, balance-wise, pivot-wise, structure-wise, pocket-wise, efficiency-wise. Aussie CAD is overextended to an extreme level. New Zealand CAD is overextended to the point where I was mentioning earlier to Shane, one of the students that asked a question. New Zealand CAD has a great weekly harmonic. We just had a daily one that became invalidated based on the movement higher, but now we have a great weekly. And Gary, I'd like you to show the weekly chart on the New Zealand CAD for 11 years. Like 90% of the currency pair movement between the New Zealand and the CAD has been harmonically driven. So the fact that we have go to the weekly chart with the New Zealand CAD and look at the smart pattern.
Okay.
And going back to 2009, it's like 85 to 90% harmonic patterns for the last 11 years.
So real quick, let me clarify. I'm on the sidelines in the dollar CAD. Yeah. There's other currencies that are against the CAD that are clear for me. Yeah. So yeah. So Aussie CAD, New Zealand CAD for sure.
Yeah, like we have Aussie news this week, New Zealand news this week, Euro news this week. If those are all driving factors with Aussie, New Zealand weakness, the Aussie CAD does what I'm short. I'm short Aussie CAD. I'm short New Zealand CAD. So, I mean, in that sense, I think the CAD could be neutral for the week. Rate decision stays the same. Press conference reveals nothing. It's going to be the same kind of rhetoric and narrative that all the central banks are dropping right now, which is, there's risk, there's uncertainty, and coronavirus this and blah, blah, blah. Like, that's the same thing we've heard for 3 months. So,
right.
Anyway, but from the technical standpoint, look at that New Zealand CAD with that smart pattern, and it's a nice weekly setup. And if you go back to the charts, 2009, it's like this thing has been all harmonics the entire time. So I think there's a lot of validity to it. I mean, obviously it can drift a little bit higher, but we now have, this would be like 4 or 5 weeks in a row. Tyson, I know you can see the supply and demand levels. I can see the pockets and inefficiencies. I'd love to see this thing get back to 85.50, just on a correction note. But I'm curious to see where it goes. So, I mean, I know Gary's got wave patterns, which makes it look like it's going to go up to parity.
So my question to you then, both of you, would be Aussie CAD or New Zealand CAD?
I'm in both, so.
Yeah. No, I hear you. It's kind of I like the Aussie CAD more, but
yeah,
because
I was going to say
I'm just more positioned in the Aussie CAD. But
yep, short term Aussie CAD has the best numbers for me. It has the best probabilities. I have that one bracketed really tightly, and then New Zealand CAD I'm giving a little bit more breathing room because the weekly harmonic doesn't have to come together and materialize today, right? A weekly harmonic is going to take time. I'm not interested in calling the top on this one. I'm just knowing that if I get a nice solid trend line break on the daily, we should have a pretty straightforward trade to the downside. And Gary has divergence noted on that. There's a channel and a trend line. There's a weekly harmonic. It's like there's a lot of good technical reasons for me to look to short New Zealand CAD. So
Oh, yeah.
that's my plan. Yep.
So are you shorting the New Zealand CAD? Is that what you're saying there, Chris?
Yep, I'm
Yep.
already short. I've got a few test trades out there.
Yep.
I'm looking for more confirmation on an aggressive trend line. I'm looking for, but same thing. I mean, that divergence looks fantastic. A little bit
Yep.
more of an aggressive inner trend line. More of a rounded type move. Or this week, like the news, if we have a nice big news drop and a bearish candle, an evening star, and engulfing candle, something that looks more promising, a price pattern on a smaller time frame. All these look great for me to stay in the position. And again, I'm a conservative, but it's like I think we can easily get back to 85.50. That's my plan. So, I mean,
Yeah.
anything at 8,600 or lower, I'm trapping all those profits because I didn't even start selling this thing until like 87.50. So there's plenty of room for me to like get in and trade small and then add to it, stack my orders up to the downside.
Did you say 87.50?
That's where I started trading, yes.
Yeah. Okay. All right. So the way I look at this right here in the short term, because you're looking at a daily time frame, in the short term, yes, we've definitely got this divergence setting up right here for a push down to the downside. I also see that we're inside consolidation right here as well. This is why I'm looking for price to continue to move up to the top of the range here, about 96 and change. So in the short term, a dip, definitely looking for a dip because they're going to continue to wave back up again towards 9600. The only time I'll start thinking bearish on this long term is if we take out the support down here, which is still a long ways down, so at around about 82. But up until that point, I'm going to be looking to buy on dips. If I'm looking to trade it as a swing trader in the midterm, I'll be buying on dips. In the short term, I'll be like Chris, selling on the New Zealand CAD down south towards its next support level. So where's the next support level right here? Well, we've got the 1.618 that's been hit right here. This is the 1.618 there. We've got divergence. We should be seeing a sell-off on the New Zealand CAD, heading back down south. Now, let's just talk about the currencies on the south. That would mean weak in New Zealand, strong Canadian. I'm on board with that because that's exactly what I'm projecting this week to happen. The New Zealand weakness and CAD strength. And that's going to push this pair back down and quite strongly. But then we have support coming off here. This is my wave 1 right here. This is wave 2 down here. So we are in a wave 3 that we've completed. So we're looking for price to move back down and get into a wave 4, and which means it could come back down to this level right there. It could come back to that level there, which is at 88.01, and then 87.03. And then we still have room to come back to retest wave 1's low, which will be around about that 85.60 level that I think Chris is talking about down there. So we definitely have room for price to move down. One thing is clear, and I think we're all on the same page on this one, Chris and Tyson, is that we definitely seen New Zealand CAD selling off over the next week. Whether it's in this week or it starts next week, it's looking for a sell-off.
Yep.
Agreed?
That's where I'm at. And yeah, I mean, honestly, look, I've traded New Zealand CAD enough. I've traded Aussie CAD enough, Aussie New Zealand enough that, you know what, if it does go, Gary, you mentioned 96. I'm like, all right, 96, that'd be a little bit higher than I wanted, but I'd be okay with that. I'd be okay with knowing that, look, how it gets to 96 is what I'm interested in. If it gets to 96 really efficiently, then I'm going to have to take a second look at it. But if it gets to 96 really quickly and it's completely overbought and it's super inefficient, then I'm definitely going to short it. So I mean, I'm fine with it as is. I'm trading it small. I'll kind of throw it into my pile of like, I'm willing to stick with a weekly harmonic, give it some time, give it some breathing room, and then once I'm proven that confirmation is happening for me in my direction, then I can be a little bit more aggressive on my position and add to it and make my, I can nurse the drawdown with small positions and then add to my winning trade once we get a little bit more confirmation.
I'm actually interested to see what the daily looks like on Right Trader Max, to see if the confirmation is there on Right Trader Max. Let me go ahead and flip over the daily right here to see if the trend has even started on this. Let's take a look here. And yeah, we still, okay, so what you're doing is looking for that correction move coming back down here. You see, the daily is bullish right now. That's why I'm anticipating still continue to rally, but some short-term dipping first before we see the rally continue. So, but it looks like Right Trader Max says that we're bullish on this one right here. You know what I'm really also interested in? I'm trying to throw it all out there, but I want to take a look here at, let's see here. End zone. Do I have the end zone here? No, I don't. No, I don't have it yet. Okay, forget it. I was going to try and see if I can put up some end zone trader right here as well. I just really want to see what the Ichimoku cloud has to say with regards to the move as well. So that would be also interesting for me to be able to see what that's doing. Maybe I can go ahead and just add it onto this one right here, but we'll do it another day. All right, well, good. That's great. Now, the last and final thing for this week, guys, we have the jobs coming out for the Aussies, and of course the GDP and CPI coming out for New Zealand and for China. What is your I wouldn't say your gut feeling around that, but what is your technical analysis based off the news and the technicals? Where do you see the overall direction for the Aussie moving?
Well, I'm bearish on the Aussie. The Aussie is extremely overextended.
Yes.
I don't know how people can get super confident and bullish on inflationary data or any unemployment data other than we're coming off of such low bases, and I get that.
Yeah.
But we've also got to ask ourselves how much of that is potentially priced in, and we've got to remember there is the philosophy and concept of buying the rumor and selling the news.
Yes.
And so that a lot of that may have happened. So I'm in a position and still love my position in the Aussie dollar. It's taken forever. It's like watching paint dry. It's just been a pain in the butt but I'm still in it, and I'm gonna be patient with it. My target is down towards. I've got a long-term target on it, down towards this 66 level or so. We may not get down there in a straight line, but I believe that the high that we put in was it June? This year's high, I believe, may be in. I believe that's in at least until the election. So what I'm saying is that, and that high is 70.65. So I believe we're 100 pips away from the high and potentially 400, 500 pips away from the low. So I would much rather be a seller than a buyer. But with that being said, Aussie dollar is not my favorite Aussie pair. Because I'm slightly bullish on the pound dollar, so I would actually rather be in the pound Aussie than the Aussie dollar if I had to pick one. I'm in both, but I would rather be in the pound Aussie long than the Aussie dollar short. So pound Aussie is actually probably pound Aussie and pound New Zealand are my two favorite trades as of this moment in the entire market right now. Long on both.
Okay, that makes sense. You know what? I want to go ahead and throw something out there. With regards to, now I'm looking at the pound Aussie right here, and I'm seeing a little bit of dip over the last 24 hours, they say 12 hours or so, a little dip in the pound Aussie right here. So you're looking, now when you say looking for a buy, are you looking for any sort of support level to buy above that?
I love this price right now, Gary.
You love it right now? Okay, good.
Right now, actually. This is, if I weren't already in, this would be a level that I'd be looking to add in. And my target is up towards 89.50 or so. I actually think we could get higher than that. I actually believe we could really, if we get the move that I'm looking for, I think we could potentially see a move back to even 95. That's a longer term move, but I think 89 or so is 89.50 is in the cards.
Okay. I want to throw something at you guys right now that's really made me think about it. I did a session this morning looking at trading targets, right? Trading these pivot points, these weekly pivot points. And something that's really come up that's been interesting over the last few weeks is the following. Check this out. And I think you guys will love this because this really tells you what's going on with the market. Take a look over here. This is this week's trading, right? This week's trading, the weekly targets have 95% of the targets that I'm the pairs that I'm focused on have been hit. You can see that 95% of the targets, and the ones that have not been hit are low probabilities, which means that price is probably going to move to the target before we get any trading opportunity in there. So that's what's happened this week there. Last week, take a look at last week. Last week, look at all the no trades right here. We set up all these trade opportunities right here, but none of them really materialized except for one trade. One trade. Look at the previous, the week before that. Then we had the same. We had only 2 trades that paid out that week. The others, no payout, but we hit the targets. Look at the week before that. All the targets were hit, no trading opportunity. The week before that, all the targets were hit, no trading opportunity. The week before that, we had 2 trades that were setting up, and only one of them, we had 3 trades that were setting up, and only one of them actually paid out, the others 2 no trade. So it's like this has been going on since the second week of June. second week of June. So we've had a very slow. Look, we had a good 15th of June. We picked up 3,000 pips on the 15th of June, but that was from trades that we had from the previous months that paid out. And so a lot of this is happening right now, and this is why I brought this up, because it seems to me like, and you guys can comment on this, seems to me like the ranges are starting to tie it up a little bit. All right, we're getting tighter ranges. The markets are not trending as strong anymore, so we're getting the market moving around these pivot points, right, and hitting these pivot points, creating very little opportunity. And so we have to be smart about the way we're going to trade the market right now, and actually pay attention to these things, because we need to maybe start thinking about looking at range-bound trading conditions, number one. Number two, and have a backup plan for a breakout, because if there's any sort of flash news or something important that comes out that breaks the market out of those ranges, this thing might just continue to rally, just like we've seen over the years. You remember over the last few years, anytime we've had some strong news coming out, the market doesn't have very slow trends, it has very aggressive trends. And so traders miss out on these big runs because they were focusing in on more of a trend-based sort of system. So we may need to start adjusting ourselves and saying, hey, let's be range-bound traders for right now. But if the market does break out because of big news, let's have a plan of action in that we can go ahead and chase after the market using very aggressive type of trading strategies to be able to get us in and benefit from this the big strong rallies that we're going to see. What do you guys think about that?
I think that's 100% key. I think that's the exact market we're in right now. If anybody's trying to trade these big moves and these massive trend trading strategies, market's kind of doing, we're really kind of in consolidation. We're in range bound and right now, but here's the deal. We're going to break. And when we break, it's going to be aggressive because we got so many catalysts that are going to break us. So and I think we were talking about this theme. Well, we've kind of been talking about this theme throughout these entire sessions. It's be nimble, be willing to change, be willing to, one of my big themes through the last 2 years is I want to do more of, I want to drop the ego and drop what I think I know should happen and just trade what is working. And so what we all need to do is just say, hey, if the market's consolidated, what's going to make the most money in consolidation? And how do I maximize that? And then I've got to be ready to change and willing to jump on the right strategy that's going to really make me a lot of money when the market decides to really go through those volatility expansions or go into a big trend. So I think what you're really saying, and this is so key, is be nimble enough to change with the market, but trade what is working right now.
Yep, absolutely.
Gary, if we can illustrate one thing, if you want to pull up a chart for traders, this would be a good visual example for us to show exactly what we're talking about. You can bring up the CAD yen on a daily chart.
All right, CAD yen daily chart.
Yep. And so think of this as it's not. I mean, yes, it's the CAD yen, but this is specific to not just one currency pair, but this is a broad look at the market, right? Like if you're noticing that the range bound conditions are happening, can you pull it up on a daily chart there, Gary?
Yeah, I'm trying. It's just trying to pull up here. There we go.
Cool. So we have from that big sell-off we had from June 8th through June 12th. We established a bottom right around 7,800. And then we came back up, and really from that bottom on June 12th, we have been in oscillation since then. So we're dealing with about 7,800 to 7,900, or about 7,800 to 7,950. So about 150 pip range. That's perfect. You got it boxed in. So this is what we're talking about, traders. If you see the conditions are looking like this is where you trade your range-bound systems. This is where you're going after targets. You're trading equalizer, perfect storm. You're scalping 20, 30 pips off the lows and the highs, and you stay with that until, and here's how simple it is. When a daily candle breaks above and closes above or below those levels that Gary shows on his charts. When you have a candle body breaking and closing higher, that is the direction we want to go. And if it breaks higher, it probably will go higher. If it breaks higher and fakes out, it's probably going to drop all the way through the lows. But expect that next expansion cycle to give us the movement that we've been waiting for. So everyone that's been sick and tired of these low volatility daily trading ranges and none of this movement, fine. Well, there's still ways to profit right now. And I don't imagine this is going to change for the next probably couple of weeks. Yes, we have a lot of news this week, but it's still July. I don't anticipate a lot changing this week or next week, but as we get into August, this is when schools are coming back. That's another uncertainty point that I brought up this week in my outlook. Look, I don't know what the heck's going to happen with schools. Kids coming back to schools, major universities opening back up, canceling sports. Are they going to have sports? This is all about money to me. where these universities are on the make or break of whether they can financially survive if they have sports in the fall. If they can't, and they have to cancel and wipe out all these programs and cut all this funding and cut all this budgeting, and they're forcing 20 to 50,000 people to be in the same place for months and months and months at a time, I mean, we're not past COVID. And as Tyson said earlier, like, are we going to see it get better? I mean, we would hope it gets better, but it certainly has the capacity to be as bad as it is now or possibly worse. Yep. So I look at, there's going to be volatility. There's going to be catalysts that get us out of these ranges. So that's where the nimbleness comes in. That's where we're watching to see when daily candles break high or low. That's where we want to start following. And so I'm, for a lot of currency pairs, I'm sitting on the sideline to look for just this. For my systems that are traded right now, I am really monitoring them closely every day, trying to make profits through the week. But when those big breakouts happen, I'm going to park my systems aside and then switch to trends, follow, run, like all the momentum that we probably will have coming out of August. And hopefully it is. Like, hopefully we see another big increase of volatility that lasts, let's say August comes out with a bang, August, September, a lot of volatility. And then October maybe stalls as we get into what? The election.
Yep.
So all these things could happen really quickly, and traders, if you're not careful, you can be caught off guard. So that's my plan, but that's a good visual to show how easy it can be, is trade the environment that you see right now, trade what's working right now, but when those conditions start changing, we start to adapt and we start changing as well so we can follow the next move.
Yep. All right. Well, Tyson,
real
Chris
fast.
and Tyson.
Can I say something real fast?
Absolutely.
On that? There's just a catalyst that I think people will enjoy kind of following along. I think Gary, you are right next door. You're in Tampa. You're right next door. Our home headquarters is in Orlando. I think Orlando is the world needs to have a spotlight on Orlando right now. And I think right now through August, because there's a company called Disney just opened last Friday. And if they can stay open without reclosing by the end of August, good to go, guys. Rock and roll. If they close down again, done. So what I'm doing is I'm going to pay attention to what's going on in Disney, what the numbers are, what the headlines are. And if they can stay open by the end of August, then guess what? If I'm looking at that CAD yen, I might be buying to the moon. If they close down, I might be selling to the moon. But it's going to chop in that. But I think Disney's going to be kind of a catalyst that tells us where the overall economy is going to be going. So that's one stock that I'm looking for.
Point.
And then next week, what I want to talk about is I've got an acronym. I'm calling it JICJED. JICGED, JICJED, and it has everything to do with exactly what we need to pay attention to. One of the dangers, and this is one of the last things I want to say, one of the dangers of what we're going through right now is when the logical, rational, non-emotional thought becomes what seems to be the illogical, irrational, dummy type of thought.
Right. That's where dumb money is, right?
When jobs, income, consumption, growth, earnings, dividends, and buybacks no longer matter.
Yeah.
But they do matter. So we're going to talk about that next week.
Well, I want to go ahead and end off with this. The market consolidates about 70% of the time. Would you guys not agree, right?
Yes.
And it trades about 30% of the time. And so what's coming down the line, traders, for those that are really interested in finding out a little bit more how to be able to trade trends and trade consolidation, how to know exactly how to trade it, there's 3 different types of strategies I like to use. Number 1, and I know Tyson and Chris have got their own strategy with range-bound conditions and, of course, trading conditions. We have Right Trader Max for trading conditions. We have target trading for range-bound conditions. We have these other conditions where you can trade breakouts in fact, it was price on order. Price on orders breaking ranges out of the European session. So trades the range, breakout. The London breakout goes into range, breaks out, right? So it's all these range-bound trading systems, and we have also these strategies, but then we also have these consolidating strategies. Check this out. Chris spoke about the Canadian JPY. I almost forgot about it. The Canadian JPY. And he said the Canadian JPY is range-bound, wait for the breakout, whether it's bullish or bearish. And if it trades bullish or bearish above that range, go ahead and trade it. Check this out. This is a new course that's coming up down the line. You're going to see this coming up very, very soon. It basically goes ahead and finds these range-bound conditions for you. When it finds these range-bound conditions, what it is, it's got a system in place that's going to be able to trade it. You can choose and select which system you want. There's 3 types of strategies. whether you're trading the breakout, whether you're trading a range-bound condition, or whether you're trading a trend-based condition. You can trade it by basically finding these conditions. So you take a look at this is a daily time frame. This is the range that was spoken about from Chris. When the market breaks out of this range, you want to know about it. You want to know how to trade it and how to be able to follow those breakouts. It's coming down the line. I want to go ahead and whet your appetite a little bit. It's not ready yet, but soon, in a couple of weeks, check out for some news about the new trading system that we're going to be talking about in the webinars. So make sure you guys get into the webinars. It's going to be absolutely mind-blowing. It's going to be something that you guys are going to be really interested in. I want to go ahead and share with everyone else. Tyson, Chris, you've got your last words.
I will say this, Gary, that was a really clever way to plug that new system of yours, because that was totally not intended.
No, it was not. No, it was not.
Hey,
but you brought it up.
I set it up, and Gary knocked it out. So well played there, sir. That's it for me. I'm looking forward to this week. We got a lot of news, tons of earnings. Like Tyson said, 2.3 trillion in market cap, and I'm looking at 45 plus companies with earnings reports this week, before and after market. Tons of volatility in the stock market, hopefully, right? Otherwise, it's the same old, nothing matters. As Tyson said, I'm curious to see how he defines JICJED, but it like logical doesn't make sense. The market's moving. I did read an interesting article on the big five, the giant five. You've got Apple, you've got Google, you got Amazon, you got Microsoft, you got Facebook. The big five are carrying the entire market between the Fed's balance sheet and the Fed support and the big five. That's why the market's staying where it is. You know, this week I mean, I think for the reality, for the logical trader, the logical investor, this is kind of a make or break type week to see where are we. You know, I mean, if earnings reports are terrible, like Pepsi had a good earnings report, so I saw today. But if earnings are terrible, like how the heck can we justify being just off the highs from February? Or in the NASDAQ sense, we're, 10% higher. So anyway, that's my thoughts. We're going to digest it this week. We'll take it one day at a time. We'll make good trades. We'll make profit.
Absolutely. Tyson?
Yeah, I agree 100%. And next week we'll talk about JICJED, and it's we either got to live in a world where we need to all put on our tinfoil hats and just be crazy, or we need to actually think logically. But let's, regardless of what the world is, let's just trade and make money with what is right now. But let's also be prudent and preserve capital when we can. So we'll talk about that next week. A lot of opportunities this week, as Chris just said. This is a catalyst week with the fundamentals. This is a huge week with earnings, and I think that this is going to be. I don't think it's going to be like the defining week, but it's going to be an important week to kind of set us up with where the next probably 5 to 10% move in the stock market's going to be. So it's very important.
And my final words is the markets are changing all the time. We need to adapt. How you adapt, and if you don't know how to adapt, you need to go ahead and get into the trading rooms. Chris, Tyson, myself, the chief. We've got trading rooms available for you to get access to. Make sure you go ahead and get access to those trading rooms, because we're going to talk about those changing conditions in the market and how we as traders need to adapt to it. So make sure you guys get in the trading rooms. With that being said, I want to thank the team. Thank you. Thanks a lot for coming in. And I'm looking to see if I missed out anything. I don't think I have. Thanks for coming in, guys. We really appreciate your input and thoughts on the market. And we'll see you guys next week, same time. This is the Epic Big Dog and the team. Saying cheerio.